IFRS, GAAP, and Indian managers take economic decisions on the basis of financial statements. If the financial statements are not properly regulated, there is a possibility that financial statements may mislead and provide a distorted picture of the business, in the place of a true and fair picture of the business. Proper regulation of the process of accounting, it is essential so that these statements should be transparent, properly disclosed, consistent, and reliable. Adequate disclosure in the accounts is also required. For this purpose, accounting standards are prepared at the national and international level. Actually, the generally accepted accounting principles are codified by accounting standards. Accounting standards prepares the norms and guidelines to prepare financial statements and annual reports. At the international level, the International Accounting Standard Committee, IASC, has issued the international standards. In this committee, there are leading professional bodies of UK, USA, Australia, France, and Canada. India is also a member of this committee. India has also prepared its own accounting standards, which are prepared by Institute of Chartered Accountants of India, ICAI. This lesson discusses various international and national accounting. It follows from the previous slide that after studying this lesson, you should be able to define international financial reporting standards, define GAAP, understand the different Indian accounting standards, make comparison between IFRS, GAAP, and Indian accounting standards. International Financial Reporting Standards, IFRS, are the standards which are adopted by International Accounting Standard Boards, IASB. Many standards, IFRS, are known by older names of International Accounting Standards, IAS. IAS were issued between 1973 and 2001 by the Board of the International Accounting Standards Committee, IASC. On 1st April 2001, the new IASB took over from IASC the responsibility for setting up international accounting standards. During its first meeting, the new board adopted existing IAS and SIC. The IASB has continued to develop standards, calling the new standards IFRS. IFRS are considered a principle-based set of standards, in that they establish broad rules as well as dictating specific treatments. International Financial Reporting Standards comprise International Financial Reporting Standards, IFRS, issued after 2001, International Accounting Standards, IAS, issued before 2001. Interpretations originated from the International Financial Reporting Interpretation Committee, IFRIC, issued after 2001. Standard Interpretation Committee, SIC, issued before. Generally Accepted Accounting Principles, or GAAP, is the Americanized term used to refer to the standard framework of guidelines for financial accounting used in any given jurisdiction, which are generally known as accounting standards. GAAP includes standards, conventions, and rules accountants follow in recording and summarizing transactions, and in the preparation of financial statements. Principles derive from tradition, such as the concept of matching. In any report of financial statements, for example, audit, compilation, review, etc., the preparer or auditor must indicate to the reader whether or not the information contained within the statement complies with GAAP. The Institute of Chartered Accountants of India, being a premier accounting body in the country, took upon itself the leadership role by establishing accounting standard boards more than 25 years ago to fall in line with international and national expectations. Today, accounting standards in India have come a long way. Accounting standards are formulated with a view to harmonize different accounting policies and practices in use in a country. The objective of accounting standards is, therefore, to reduce the accounting alternatives in the preparation of financial statements within the bounds of rationality, thereby ensuring compatibility of financial statements of different enterprises, with a view to provide meaningful information to various users of financial statements, to enable them to make informed economic decisions. The Institute of Chartered Accountants of India, ACAI, being a member body of the IASC, constituted the Accounting Standard Boards, ASB, on 21st April 1977, with a view to harmonize the diverse accounting policies and practices in use in India. After the above adoption of liberalization and globalization as the cornerstones of Indian economic policies in early 90s, and the growing concern about the need of effective corporate governance of late, the accounting standards have increasingly assumed importance. The accounting standard setting, by its very nature, involves reaching an optimal balance of the requirements of financial information for various interest groups having a stake in financial reporting, with a view to reach consensus to the extent possible as to the requirements of the relevant interest groups, and thereby bringing about general acceptance of accounting standards among such groups. Considerable research, consultations, and discussions with the representatives of relevant interest groups at different stages of standard formulations becomes necessary. The standard setting procedure of the ASB is designed in such a way so as to ensure such consultation. IFRS are standards and interpretations adopted by international accounting standard boards. Indian GAAP are the standards notified by the central government under the Companies Rules 2006 and the relevant requirements of Companies Act 1956. Given on the screen is the comparison between IFRS and GAAP. This table shows the first 5 differences we've taken into account. The table here shows the rest of the differences. Now let us check if we've understood the various concepts discussed in this lesson clearly. IFRS is applicable on Indian companies from 2010. Right or wrong? Please click. Wrong. GAAP stands for Generally Adopted Accounting Principles. Right or wrong? Please click. Wrong. Accounting standards are formulated with a view to harmonize different accounting policies and practices in use in a country. Right or wrong? Please click. Right. Before we end, let us briefly revise what we've studied till so far. After 2011, India Incorporated will experience drastic changes in the way financial statements are reported. India is among the 150-odd countries that have decided to adopt International Financial Reporting Standard (IFRS) in 2011. However, the question remains, is corporate India ready to join the ranks of the EU, Australia, Singapore and Sri Lanka, which are among the 100 IFRS compliant countries? IFRS compliance would require changes right from the grassroots level, beginning with academic inputs and training. And this is not going to be an easy task. Given the limited time frame before the new standards come into force, IFRS, previously known as International Accounting Standards, IAS, are standards and interpretations adopted by International Accounting Standards Board, IASB. IASB adopted IAS in April 2001 and renamed it IFRS.